Oh, you don't want to say anything about cummies?
Oh, I know. It was really so. It was just
Corey, what do we have to talk about? What are you gonna explain? They're literally like, this is buying OnlyFans trading cards.
Let me just check it out. At least see like if it does something, because it's saying like it gives them money somehow.
Corey, they're selling sex tapes for free, and this is legal, bro. This is like, oh yeah, go through Pornhub, get a couple viruses when you click the link. Trust cumrocket.io, bro. Get your cummies today. Research your cummies. If you want to come, we'll come with you because we're going all the way. Cut to the intro.
Holy shit, bro, you just got, they mentioned you in the chat.
Oh really?
Yeah.
Who did?
Gus did, yeah. That's funny, I was like, oh shit. It's just like...
Yeah, he definitely like just named a bunch. He didn't need to...
And Cardano?
Yeah.
Welcome
back to the podcast. We've been recording episodes. Everyone can shut the fuck up for now because we can get back to that in a later time.
The whole thing about the chat.
Yes, bro. Everything is in there. All right, we'll cut that out. You'll just see us fade into that. Welcome back. It's week 5. We're back.
Like Cardano.
We haven't filmed in.
Cardano
back the fuck
doesn't
up.
do jack shit.
There's a lot of people in the audience today. We have a live studio audience. We are also filming with no tripod, and everything else is more janky than anything you can see around, but we're not going to show you because we're professional. That's right. It's the January 23rd, 2022, the last episode we filmed in 2021. Happy New Year.
Happy New Year.
Yeah. Thank you, live studio audience. Anyway, but as the new year comes, more, every new year always starts off terrible. Last 2021, we started with World War III almost happening. And a bunch of fires and the raid on the Pentagon. But we're not here to talk about that. We're here to talk about the financial crisis that is going on today. And, in the last couple episodes, we've talked about NFTs, morely crypto. In this episode, I think we're going to talk about more. We're going to give you a crash course of basically finance and investing. Because, to understand crypto, you got to know the basics.
That's right.
How's your week going?
Going pretty well. Week's been going pretty fast. It's pretty much the end of January already. I feel like the new year just started.
Yeah, it's Sunday.
Yeah.
We really haven't been doing much. It's a lazy day.
Market's been crazy recently. Absolutely. What are the prices looking like?
Terrible. Every time we start one of these episodes, I haven't said once like, "Oh, the market's been well." But as of right now, Bitcoin's at a holding price of $35,449, and Ethereum is $2,453 as of the current state. But you know what that means? As the dips go down, time to buy in is right now. And we're not financial advisors, but we can also just tell you we think that is a good time to buy now, because if we told you otherwise, you can sue us, and and we don't want that. We can't afford that either.
This episode will be telling you our strategy and how you can apply it to your own situation.
That's right. So if you want to learn about other stuff, check out our other episodes. If you don't care about your finance and you know everything about what we're going to talk about, go ahead and skip this one or check out our recent episodes. And please follow us on TikTok and YouTube and our Instagram. Posting all our daily content going on over there, and we keep you up to date with other organizations and programs going on around in the crypto space.
Yeah, I'm gonna probably be putting some token videos out on the TikTok/Instagram.
Yeah, we filmed a commercial. We don't know. At this point, if it's out, it's out. If it's not, you'll see it soon. So, crash course, finance, crazy.
Let's go.
I think the beginning of all this is that money is only just a man-made thing, as much as many other projects that's ever been made. The airplane, the Z explosion,
the Zeppelin
explosion, the automobile and the assembly line. But as everything starts, money started too. And money started before with the beginning of gold as its currency, and as we learned earlier, what do you want to say?
Pretty much at the beginning, like, it wasn't even gold. Pretty much just people had their own currencies. that they were using. Like, I imagine at some point it was probably actually the whole, like, bottle cap shell nonsense. Probably not bottle caps. But I'm pretty sure the first currencies, aside from those, came from just banks that would just start up by themselves. Like, town cities. Banks. They would just have their own banks. And one individual, like, country would have 6, 7, 8 different currencies just based on, like, what the biggest banks that existed were. And those banks, so when people were finding the different, like, objects and stuff to use to trade, everyone was trading gold. But trading gold just gets cumbersome after a moment. Like, you could be like, oh, I'm buying an apple, and you would have a tiny bit of gold to go buy the apple. And, like, at some point it got kind of weird to try to trade different sizes and weights of gold for different objects. So they just thought, oh, if we have banks or some type of building to go take the gold, have the value of the gold turned into paper notes, and use those paper notes to trade, then those banks could just use the gold in order to facilitate all the transactions happening without the burden of having to carry the gold around.
Yeah, imagine carrying a block of gold everywhere. First of all, so many people would get robbed, and like, where the fuck would you put it, bro? My pockets aren't run that deep. Like, I can't imagine running with that pounds. But yeah, originally, first currency was kind of just like pieces of paper, like with nothing on it. It was probably just like, you know, something you draw together, or just a receipt.
Yeah, that was pretty much what it was. It was just a receipt of gold deposit, and then you could use that receipt to buy things.
What happened that changed all this? The gold standard.
That pretty much was the gold standard.
And that was the gold standard.
Yup. So,
as the future came, the world had to progress.
Yeah, pretty much what happened, it was just, like, all those systems were kind of just existing and happening, but there'd just be things messing up the system. Like, because everything was backed by gold, let's say they found more gold in some part of the world. Because of the new supply of gold, the price of gold went down, so the papers that people were using to trade things with, like, that value would go down too, because it was tied to the price of gold.
Beginning of inflation.
Kind of, yeah, because that's a primitive example of inflation right there. Higher supply of gold came into the market, so the total value of all the gold went down. A combination of that plus World War I and World War II happening caused the value of those bills to just be too volatile for people to feel safe having that system occur. As the United States was one of the only countries to have a large supply of gold and a good position after World War II, they invited 44 other countries to send delegates to, I think, New Hampshire. They met in New Hampshire.
Yeah, it was New Hampshire in...
I think 1940s?
Mm-hmm.
1940-something, they met up in New Hampshire to set up the Bretton Woods system. So the Bretton Woods system was pretty much a system to try to stabilize every world currency.
It was basically to make everybody like work together, like instead of being separately, you know?
Yeah, it was to make sure that like the currency stays stable, so relief after the war would be better. Like, if all the countries were just like shaky and like dying after the war, it'd take a long time for things to like pick up and recover, and for the economies to keep running.
Yeah, but as we all needed this because after the war, everything was kind of down. Every country needed money, and with this in play, like, this really saved a lot of us. And but we're still in debt, but like it gave us a good temporary hold up.
Yeah, so pretty much what happened is every single country's currency was tied to the U.S. dollar, and only central banks could convert the gold into the bills. So the regular person no longer had the ability to turn the paper bills into gold. Only the central banks had that power against the government. So pretty much other countries would take their paper currency, trade it for the US dollar, and then they would use the US dollar, or they wouldn't use the US dollar, but the central banks would use the US dollar and trade that for gold, and that's how the system balanced itself out. Yes. So the dollar bill pretty much became the reference of gold for every single other country to try to use.
Yeah, that's why currency exchanges are all based off of us. If anyone cares, my horse is not sold on the market yet. Please buy it. What do you want to talk? What do you want to conclude on the Bretton Woods system?
So the Bretton Woods system, it came to an end pretty much because the United States, as the person who was managing giving money to everyone, there'd be projects all across Europe and such where they would need US dollars to complete construction or such. So the U.S. government would need to print more dollars in order to give money to the countries that needed it. But then other countries that didn't trust the United States' ability to make good on those bets would go up and have their central banks exchange their paper bills for the U.S. dollar bills and then U.S. dollar bills for gold. So other countries were taking their gold out of the United States gold supply because they are slowly losing trust more and more that the United States would be able to handle everything. And that essentially collapsed the system. We were running too low on gold, and the current president at the time, Nixon, in 1971, pretty much put a stop to the ability for countries to take out gold from the supply, pretty much.
Yeah, fear makes people really act up. You need water? There's no water in that cup if anyone asks.
It's for the camera. It's for the camera.
But yeah, but as this happened, inflation started happening, and right now, as currently, the inflation is through the roof. It's probably the worst. It's the worst it's been.
I think since the 60s, maybe?
Since the 60s, since the beginning of this whole pandemic. I guess it's still a pandemic.
Yeah.
Well, yeah, but history repeats itself, and as we all understand right now that the crypto market is down as well, and you're looking at us like, guys, what the fuck are y'all talking about? And we want to say, trust us, please, because if you don't trust us, then you can't trust other people. You gotta start with us. Anyway, but what I'll get into is, don't be scared of all this stuff dropping. And if anything, you should look at this as a good opportunity to get yourself into the market, because when prices go up, then you're going to complain that you never even had a chance. You should change up some of your current lifestyle choices and work on your financial portfolios. Build yourself up.
Pretty much, if you have a strong foundation and you allocate your money correctly, no matter what the situation is, you'd be able to feel safe that your money isn't just going to rapidly decrease, or even if it does, you'll have a pool of money that you'll be able to pull money out of.
Yeah, now you need that water.
Yep.
A house can't be built without a strong foundation. Your portfolio can't be built without a strong foundation. So start today. Remember, don't be scared. Think of it as a learning experience and build and adapt to it, because that's all life is. That's all, you just adapt to everything coming your way. You're never prepared for anything. We can't predict what's going to happen next after this episode airs and what happens to the market. But everything's short term. Nothing's always up forever. So things always must come down. But as things come down, bigger things come ahead. You want to say something about that?
You can't really tell what's going to happen in the future. It's pretty much what you said, but you just need to prepare your portfolio to just weather most things that could happen. For example, you shouldn't have too much leverage out. If you are borrowing against the money you have, you should try to keep that at a respectable level. If you're borrowing half the money you put in, if the total value of your money goes down past a certain point, you could just lose half of your money for pretty much no reason.
And then you go into debt, and no one wants to be in debt.
Or you could, if you have a lot of external expenses.
Yeah. You got to be smart with that stuff, though.
Yeah, exactly.
Remember, always do your own research. Be your own superhero.
That's what the debt part. You don't really go in debt by being liquidated. You kind of you put the collateral there in the first place. So it takes away from the collateral. So
goes to puberty.
Fucking when I went to pour the water, it was that much.
Yeah. We're taking a short break. Guys, remember, download Brave. Brave is a great web browser. I'm not saying we're sponsored, but Brave, if you're listening, we'll actually clip this out. Brave, if you're listening, please talk to us. Dave and Court, More Coins, More Problems podcast on YouTube. Hit us up. We'll help you out. We're helping you out right now. We don't even need your help, actually. Download Brave. The web is a scary place, and cybercrime is at an all-time high. Why not use one of the best browsers against ad blockers without even using third-party extensions? I watch Pornhub, Courtney watches Pornhub, and together our history is safe with us. So please, download Brave today. Welcome back.
What's good?
Well, banks are basically lenders. If anybody, for the basics, for everybody out there, just so everybody knows, when you put your money in a bank, it's not going to stay there. They're using it. They don't need you. Actually, they do need you. What am I saying? They do need you, But, you know, when you put your money into a bank account, your money is not actually there. So say, like, I put $4,000 in and I wanted to go back a month later and go get that $4,000. Or, like, no, that's too low. I think, like, say we put $20,000 into an account. It won't be the same $4,000. Yeah. All right. But still, we put $20,000 into an account. We're big ballers here. Now, say I wanted to take out that $20,000 in cash. The bank doesn't have that cash just right there. They have to go through a little bit of process and get other banks along.
Yeah, it depends per bank. Like, the different banks will work a little separately, but the thing is that the governments don't force them to need to have the cash on hand. Before, they used to need to have 10% of the money there at the bank at all times, but that's not a thing anymore. Yeah, because they could have as much or as little.
The pandemic changed it, bro. Now, before, yeah, as you said, the bank ratio, the reserve ratio used to be between 0 to 10, and it was what was it? It was like 8% that it was like stuck at for a while. Or
no, it was 10% until in March 2020 they lowered it to 0.
Yeah. So right now banks just use your money for whatever. They don't really need to hold any money that we give them. It's kind of just a free game, free range per se. Banks also need us for, you know, there's multiple different outcomes. I think there's 3 main ones. The rate fees, late fees too. They that's not their main money. Yeah. That's not the main income, but it is like, I think 10%. You looked it up. It was like 10% of most banks.
Yeah, most banks, it's like a small amount of money they're making, like less than 15%.
What are the other 2 like assets for banks to make money?
Oh, though they themselves have their own investment portfolios usually. They manage money for their wealthy clients. Like, they have, like, the wealthy clients. They usually have some type of fund where they manage the money for them. They have investment management for them in particular. If the bank provides mortgages, they make money through mortgages. When you buy a house, and let's say the house is $200,000, you put $20,000 down on the house, and you take out a mortgage for $180,000 from the bank. That mortgage could be at like 6%. And over the course of the years you have the house, that interest that they're charging you, that 6% on that $180K while you're paying it off, that money's what they'll be making. And that's pretty much where your money goes to when you put it in a bank. They put into these different investments to try to make a return, and they give you a really small amount of that return in savings accounts usually. But aside from that, all they do is just provide a way for you to put money in and get a little bit of returns out.
Yeah, as a side note, we've mentioned in a previous episode that, you know, banks are good for a savings account, but there's also a lot of good things in crypto that give you better interest returns with your savings. As we mentioned in our previous episode of what was the ecosystem, Terra. If you go into Terra, I forgot the name of the program as of right now.
Oh, Anchor.
Yeah, right.
Anchor Protocol.
If you go to Anchor Protocol, you can see that it gives a better. Sometimes these new crowdfunded stuff gives you better interest returns on what the bank gives out now.
Anchor gives 20% APY. Right now, it's about 19.5% APY. There's been a little like shakiness on people's trust and how long they'll be able to maintain the 20% APY because Anchor currently is operating at a deficit, but they've been able to manage a 20% APY pretty much since it came out. It's dipped to about, I think, 17 or 18% in the past, but right now it's about 19.5% APY, which is more than like 20, 30, 40, 50 times what the average savings account rate is right now. I think average savings account right now is 0.5%, and in good years it's either 2 or 4%. So regardless of most things, it's at least 6 times better than regular savings accounts. Doesn't, however, have the Fdic insurance that regular bank accounts have. As a United States bank account holder, each bank account is insured up to $250,000 by this program called the Fdic. But one thing I find really interesting that I found recently is that the Gemini GUSD stablecoin is actually backed by the same Fdic insurance. You could go double check that or confirm it on their website just to make sure, but from what I saw, it looks like you could get their stablecoin GUSD, make either 6 or 8% APY on that coin, which as you hear is quite a lot higher than a regular savings account.
That's right.
And it has the same Fdic insurance backing, whatever you want to call it, that the regular bank accounts have, up to $250,000. So
yes, sir.
If you have more than that in cash for whatever reason, you'd want to split it up into different bank accounts.
Yeah, diversifying is key.
Pretty much.
Like,
that's what we're going to be talking about this whole episode, pretty much. So if you go to a personal advisor and you try to ask how you should allocate your money, they usually go based off of your age. If you're younger, they'll try to allocate mostly towards stocks. And if you're older, they'll try to allocate mostly towards bonds. The stocks that they put your money into, it ranges from just regular growth companies, large companies, small companies, international companies, and possibly even real estate investment trusts, which are pretty much just an object on the stock market that houses properties, just real life properties pretty much. They take real life properties, take the returns from those investments, and make it into a market instrument that people can buy. And they're just called REITs, Real Estate Investment Trust. You put the money into that, they use that money to manage their portfolio of assets, you get some of the returns from those assets, and they take some of a fee. That fee is built into the stock, and that's pretty much how they work. So,
yes, sir.
Between the regular stocks, the bonds, and the real estate, they pretty much form that up into a portfolio, like usually 80% stocks, 20% bonds if you're about our age, 20, 30.
And then as you get older, it usually changes from more bonds to stocks. Usually, I think, but you explained earlier, I think like 60% bonds when like you're hitting your late 60s, early 60s, late 60s.
60s, 70s, they'd recommend you have less stocks than bonds, like either like 45 to 55 or like 40, 60.
Yeah. Yeah, man. With banks and you get different kind of assets coming out of this stuff. Or do you want to wrap up on banking, or do you think we should get to the assets?
United States had 2/3 the amount of gold in the world before the whole system was put in place. Due to the effects of the system and the other countries pulling their gold out, the United States was left with less gold than it had before, and the dollar was really inflated due to all the money that it spent giving to the other countries to do whatever they were doing post-war. So a lot more dollars were in the system than there ever were before, and since that event has occurred, inflation's been something that's been recurring over and over again in history as time's gone on. The dollar's been on a permanent decline pretty much since 71. It's pretty much just like a classic thing. Like you ask your grandparents how much certain things cost back in the day. They'll tell you, oh, premium gas used to be 50 cents, blah, blah, blah.
Imagine that. Jeez.
Like, gas right now is like, what, $4?
I don't want to talk about gas. Ever since inflation's been going like badly, gas has been going up, and like getting places is a lot difficult. To get to this studio right now, as you can see, I actually came on a camel. Courtney actually borrowed my donkey. He can tell you about that later. But no, in all seriousness, gas is terrible. Gas's prices have been going up, and it's getting annoying at this point. We're not going to get political here, but fix us.
They try to say that inflation is transitory, but like if you think about it long term, we're never ever gonna see 50-cent gas prices again. We're never gonna see $1 gas price ever again. We'll probably see $2 again, maybe. Just depends on the economics during the situation. But in general, it's pretty set in stone. Like the prices of everything in general is just gonna keep going up as time goes on. One prediction that has been floating around recently is that the average house price in the United States is going to be over $1 million within the next few years.
You've been telling me about that, and you want to get into real estate now because houses are going to be way too expensive later on.
Yeah, pretty much. Like I think the generation before us had a pretty good opportunity getting a house. They could just work a regular job, be able to afford a house like in their teens, 20s, just working a regular job. I don't think we have that chance. 4, 5, 6 years from now, I think it'll be incredibly hard to get a house unless like there's a really well-timed crash that happens across assets in general.
Or we switch to mobile homes. Because traveling in a house, not that bad. A house stays, a car moves.
See, I keep on saying we could do both. Like, there's no reason not to have... Because there's a difference between where you're living and what you have as an asset. You could have a house as an asset just because you know the price is going to go up, and also live in the mobile home just because you want to live in the mobile home. You can just set up the situation however you want. It's more about having it in general as an asset because people are going to want to live in the United States. So just because the fact that people are going to want to live in the United States and have a nice looking house, that regardless of what happens in society, this is probably going to hold its value pretty well.
Yeah, real estate's the main it's the main thing everyone needs. Like it's like the main asset everyone tries to accomplish within their whole lifetime.
It's one of the main things that people end up making a lot of money off of. Like a lot of people who are millionaires today, if you try to ask, what was your first main break in making money? It's usually real estate. Whether they're flipping, whether they're just acquiring a bunch of rental properties, whether they're just doing it like the stock market way and just flipping different assets.
Yeah, it's real estate and cars that usually most millionaires say when they're flipping cars that they get off online.
I feel like most millionaires flipping cars.
Yeah, they're not flipping them, but
I'm like, what percentage of the millionaires flipping cars?
Not, bro. Think of it. Well, do you know any car millionaires?
That's what I'm saying.
Well, that's because we didn't look into it. There's definitely car millionaires.
Yeah, but I'm not most most millionaires. They became millionaires through real estate. I feel like probably 10% maybe came through flipping cars. You must be a really good car flipper. So and it's not even you must be good. It must be that good that most of the millionaires became millionaires off of fucking car flipping.
Think of it like this: you don't. I'm pretty sure people who are car flipping, it doesn't start overnight.
But they make a shit ton of money. I understand that part. Especially when you do it across different states and shit. And that's another thing people don't really realize. When you buy things across different markets, the market conditions change. You could buy a car in the United States, move it over to a different country, pay money to move it over, and even though you paid additional money and possibly driven the vehicle a little bit, due to the supply and demand in that other country, the car could be worth 2 times, 3 times more, and you can make money off of the difference. And that's pretty much what people do with most assets all across the world. A lot of the game is just moving things between different locations, and that kind of stabilizes the price in a weird way. You want to try to avoid markets where there's not too much trading happening because the prices could be unreliable.
Yeah, that's why nobody trusts crypto right now. It's too volatile.
See, that's kind of two different things.
You can't put those two and two together. They compare, no?
I don't know. One of them's I have a car garage and it holds 20 cars, and let's say every I don't know, I'm a car salesman, and every day 5 customers come in or 10 customers come in to get cars.
What are you selling?
What do you mean?
What kind of car are you selling, bro?
Fucking Teslas.
Right.
We carry Teslas. We have Teslas in the garage. Let's say I don't just have the business for giving out cars that way. Let's say I also run Turo or something. So I'm renting out the Teslas to regular people. If the supply of my cars is always wishy-washy and people want to come get their cars back and there's no cars available, that's just, I don't know. There's not enough I don't even know how you explain it, man.
Maybe we can leave it on that.
Yeah.
On that note, just this,
Because, the price going down is literally, because when you sell, it goes down. When you buy, it goes up. So, if a lot of people sell, that would prove that the liquidity is good. Because the people were able to sell, that means there was enough cars in there to facilitate the sale. If all the cars were, not in the garage and not buying or sellable, that would mean, that's a bad situation. People aren't able to get their money out. So, that's why it's different. Because, your situation going good means my situation isn't a problem. My situation being a thing, it means you're, they're opposites of each other. That's kind of why I'm they're not the same, because they're actually opposites.
So, yeah, as one goes up, the other one goes down.
Yeah.
It's kind of wishy-washy the entire time.
Yeah, it's just kind of hard to explain, because one's liquidity, and then one's price. So, they're two different things. It's kind of hard to explain.
Oh, we can leave it on that.
Yeah. When it comes to inflation, just like I explained, the gas price is never going to come down. You could think of it as your money going down every year while it's in cash. The way to think about it is, let's say you have $1,000 in cash, and let's say inflation is, or let's go with 100 just to make the math simpler. I know it's just removing a zero, but whatever.
Yeah, for sure.
Yeah, so let's say you have $100 in cash.
$100.
Let's say you have $100 and inflation is 6.8% as what the government reported this year. You can only spend. I'm so bad at math, man. It's 100 minus 6.8. 90.
100 minus.
6.8. So it's 94.2. It's 94.2.
Can we get that for certain?
93.2.
Get that right?
93.2.
93.2.
What did I say?
We got 2 confirmed from the live studio audience.
93.2. And that's 6.8. Education.
You can't. Oh man, they're gonna hate us. We'll bleep out. Should we bleep out the? Yeah, no, fuck it. Whatever.
I don't know, man.
It is what it is.
Because it's like the year after year difference. Like because there's a lot of people who are just hoarding cash, putting money into bonds, putting money into things making less than inflation, and it doesn't really make sense. Like if you have a savings account that's giving you like 2% and inflation 6%, you're losing 4% every year with that money in the savings account, thinking that you're making money. Like the amount of money is going up, but it's going up slower than inflation is making it worth less. So the prices of things are going to go up, and your money isn't going to go up the same amount. Let's say real estate, it gives pretty good returns. Like I think last year, my real estate investments made 22%. So the amount of money in that investment outpaces the inflation. So the inflation pretty much doesn't affect me by like 18% or so, or like 16, whatever the number is. You having the money in the savings account, pretty much you're losing 4%. I'm making like 14 whatever percent. You could think that the savings account is safe, but in reality, mine makes me more safe. And if you have different investments, like doing different things, like it could not be the real estate that's like supporting it. It could be podcast, or it could be like a different crypto investment. Like maybe you have like 10% of your portfolio in Bitcoin. I think Bitcoin is still up for the year, even though it's down to 35,000. I think it started the year, like last year, obviously, at 26,000. So I don't know what percent that is, but like, let's say hypothetically that's like a 6 or 7% increase. It's still beating inflation.
Yeah. What the thing is that with inflation and all that, the big thing is that we always look at the overall picture. We never look like, when it comes to like, we're always on the day-to-day axis. So like, as of like recently, like Bitcoin shot up to like 40,000 and shot back down, and now it's just going back down. But if you look at it through like over time, it's still gradually going up.
Yep. Just if you look long term, Bitcoin is just always going up, and up. I think it's going to forever pretty much.
Yeah, that's why we tell you, buy, hold. Never sell. Actually, do your research on that, but buy on the dips, hold until the dips go up, and then sell.
A good strategy, we'll talk about it more later. I think it just makes sense. Just whatever you have faith in and that you want to buy, you just buy it on a regular basis. And since the prices tend to like go up and then dip down, go up, dip down, go up, dip down. If you want to sell, just sell when it's like relatively high enough where you made some profit. Don't sell your entire position, but sell maybe only the profit or half the profit, quarter of the profit. Just make up whatever rule you want to make.
If you're ever feeling iffy about it, just sell. A quarter is a good way to sell first, like, before you start selling the whole thing. Because it's never really good to sell the whole, your whole investment as like if it's still going to go up.
Yeah, pretty much. Like as it is right now, like a lot of things are going to die, and like eventually you might want to sell the entire bag. But like while the market's still a bull market in general, it kind of makes sense just to stack up whatever you want to stack up, take profit when you take profit, and even when it goes back down, still be buying on the way down next time it goes up, and just rinse and repeat. You could just make money whenever the market comes back up. Because in general, it's always going to be going back up. Even if like it enters a bear year or year and a half and it's just down most of the time, that's when you should be researching, putting money in, just riding out the wave.
Yeah, and I think that brings us right into the next topic of why you should invest in these companies when it's down, and what is it? You should invest in these stocks and bonds out of these companies. And for everyone at home, the stock market, it's everywhere. The main definition of a stock is like you're buying part ownership in the company. What is
Bitcoin's still up 34% for the year.
Just so everybody
knows. Even despite all the nonsense. Yeah, so if you go from the starting price of 26,000 at the beginning of 2021, I believe, and putting the end price at 35,000, what I'm going to say it is right now.
If you want to put exact 35,449.
We could even do 34,000. That's still at least a 30% increase, like, since 2021. So we could even do the math if you were dollar cost averaging, like, $10 per day, and I bet the number would be something crazy.
Yeah, and what's also interesting is that everyone thinks that like crypto's down for it, but like crypto just shot up. I think in the last 2 years or during the pandemic years. That's what
It shot up 2 times last year. Literally, it started the year at $26,000. It took a little while, jumped up to 64,000, and then it dipped for those middle months. Like it was April, March, May when it shot up to 64,000.
My birthday month was like terrible. I remember that.
And then it dipped down right after that, and then it was down for like 2-3 months, and then I think it was October or so when it started shooting back up, and it went all the way up to 69K, and then now it's coming back down as we saw like towards Christmas. Big disappointment, blah blah blah. Didn't hit the 100K everyone was expecting it to hit. And now we're back to just sideways market. And I really think it's going to stay sideways for a little bit. Like, I think it's going to take a bit
It's got to catch
its momentum back again. But the more the market goes through these type of things, the more they'll have confidence that it's just not going to randomly die out of nowhere.
The more research comes out of this stuff.
You want to talk about stocks or bonds?
For everybody at home, stocks is everywhere. Everyone heard of the stock market. It's a big thing. For the definition of stocks is basically you're buying a portion of a percent into the company rather than a bond that is more of a loan to the company itself. Courtney, you want to explain the rest of this stuff?
Yeah, pretty much. So, as you said, when you buy a stock, you buy a share of the company. A company goes public by pretty much working with some like underwriters to just formulate and evaluate how much the company is worth. After they figure out how much the company is worth, they try to figure out how much of the company they want to sell. So, let's say the company is valued at like $10 billion. They can go and say, we want to sell half the value of the company in shares, and they'll release $5 billion in shares. Now, when the company goes public, those pretty much release the shares to be able to be sold, and I think it usually launches on one of the big markets in the United States. Like, I don't know the whole like technical of how this part happens, but I think it just gets listed to a particular exchange. Like, I think like it gets listed on the NASDAQ or the NYSE.
I'm pretty sure it's the NASDAQ morally, because the NASDAQ is what we follow more than the stock.
I don't know which one it gets listed on typically. But
do your research.
Yeah, they find one to list it on. They get it listed, whoever. Maybe there's fees to get it listed, whatever. But an IPO happens. You see on your Robinhood app, oh, this new stock ticker's coming out. And then people buy it. People are able to have public share of the company. And pretty much the job of the company at that point is just to make money.
It's to do well. It's like...
Exactly.
Yeah.
Now with the public money, the company is able to sell shares. And they're able to raise money by selling shares. People buy the company. When people buy the shares, the price of it goes up. They're able to sell shares, use the money in order to invest back into the company. Or if the company is developed enough and big enough, they'll use the money that they're making from the regular operating to pay back the investors with dividends. And that can encourage more investors to buy in, knowing that they're going to be getting a steady return from buying shares of the company.
That's basically what bonds are doing.
That's pretty much why some people believe that like stocks are just a lot better than bonds in many ways, but it's kind of a balance. Like bonds are typically viewed as like a safer alternative to stocks,
and it's more long term. To get it more, it takes longer for bonds to give you your return investment back.
Yeah, they're safer, but they take a long time to like make a return on the investment.
Which, gotcha. Yeah, we
1 year.
We categorize bonds basically how long it takes to mature. And maturity means like the time it takes for your initial investment to come back. And the different types is that at about a year, it's usually called commercial papers. Within the 1 to 10 year ratio, their bonds are called notes. And when you get to the 10 to 30 year mark, they finally become the official title of bonds.
And it kind of gets weird because when you buy them, they exist already as like what they are. Like when you get a 20-year note, it's already a 20-year note. It's not like it grows to become a 20-year note. Like you kind of just buy it like as whatever the fuck it is. Like when you buy a 1-year bond, they call it commercial paper apparently. Like I didn't know that.
That's right.
But yeah. Like it's correct what you're saying. It's just weird because like it comes from the future. Like it's weird.
Yeah, and every bond comes with coupons, which is basically the interest received from the bonds.
Yeah, see, like I didn't even know that part. Like
it is, isn't it? Yeah, Dave does his research. A lot of y'all think I just sit here and be quiet. I do my research. The smartest people talk less. No, I'm joking.
Nah, but it's a good idea. Like realistically, psychologically, if you wait for like the other people to speak their mind, like it feels like, I don't know, they'll respect that you're paying attention to what they have to say, and I don't know, it's just generally viewed as like I don't know, you're not in too much of a rush to make what you have to say heard. Like you have confidence that like other people express their opinion, you'll respect their opinion, and they'll respect your opinion when it's time for you to say it. You know what I mean?
Yeah, for sure. While I'm taking this free period while everybody's researching on their phones, I just want to say a couple things. Well, I can explain to you a couple things because I have notes. As we can compare some of this stuff to cryptos, we've heard of the term hedging funds in cryptos, and that's basically protecting your money.
Hedging is doing what hedge funds do.
Protecting your money.
They protect money by diversifying what you have your money in. Yeah. Which is pretty much the strategy that we want to. Yeah, the main strategy we want to teach is that you never want to keep all your eggs in the same basket. It's like everybody, it's the main. Exactly. It's the main fucking point. There's also this term of prospectus. My bad. Yeah, if you're actually listening, look, don't judge us. But that's basically the prospectus or the prospectus. It's basically the white pages on any crypto NFT project. So whenever you. That's like prospectus is like the regular bank word. Like when you get a stock, they show you the prospectus. Like in crypto, we call them white papers because like white papers refers to like technical documents. Like. It's just different fucking industries having different words for shit. Like medical people probably call their things research papers or whatever. We call them white papers. They call their investment whatever and disclosures the prospectus. Mm-hmm. To explain that, there are different types of stocks you can get into as well. As we want to come back to the stocks for a second, there's preferred stocks, which is less volatility. But there's less, but it's more diverse. But there's less voting rights in that. I don't know if it's like the banks like saying because I don't know if these are like bank recommendations or like what. No, these are just terms like from that you need to know as we talk about this stuff. Yeah, but I don't know like who Houdini. No, like who's making these terms? Like preferred stocks? Like is that a thing across every? Yeah. Look, Google it. Again, as we take this another commercial break, I just want to say, download Brave. What do you want to say? What do you want to conclude this with? The main points out of like what we just talked about. Pretty much main points to get from all this is the main point that I wanted to stress throughout this is that finance is a constantly changing and evolving field. We make certain systems, such as the gold standard, the Bretton Woods standard, and they work. They might not work. They might work temporarily, but you just need to realize that like most systems that we have are just sets of rules that we make ourselves that interact with just other human beings and what they're doing on a regular basis. Economics, it's not a field where everyone agrees. There's like Austrian economics, there's like traditional economics, there's just different theories for what's going on in the world. And how to fix them. And you don't really know what's going to happen in the future. All you can really do is just predict. I don't know. You can't base the future off of past events, but you can kind of use like the past events to try to prepare for like potential future outcomes. But like, I don't know. Courtney's trying to say, learn from past history. As history repeats itself, as we said before, learn from the past. Well, you see, that kind of like conflicts with what I just. Like it gets weird. Like you can't rely on the past to predict the future, but at the same time, like you can learn from it. You can still learn from it. Yeah. This was a difficult podcast episode. We did talk about a lot. There's a lot. I think we did bring up a lot of terms, and we covered a lot. And I think it was a good little crash course overall. The live studio audience is not asleep. Studio audience is live and well. Everyone was really intrigued. We wish we could show you, but we don't want to sign MDMAs. MDMAs. Is that? I think I got the right. Is that what yeah. NDA, non-disclosure agreement. MDMA. Oh. Whatever the fuck. The extros. Whatever the fuck, Alamaze, the fucking... they want to sign all that. But
The main point, remember to diversify your assets. Remember, as a disclaimer, we are not financial advisors, but take what we say with a grain of salt and do your own research, because doing your own research is what's going to make you more valuable.
Yeah, if you know more about what you're investing in, you'll trust it more, and when you trust it more, you could feel safe holding it during the hard times, and that's pretty much what we want to stress. You just need to learn about all the different areas, what affects your money. Just try to expand your knowledge. Don't just watch one channel, watch multiple channels, get different points of view about most things, or pretty much everything that you try to factor into your thesis on what to do with your money, because it's just important. You got to have different areas of knowledge to be able to
grow
things
by
happen.
learning every perspective.
As many as you could possibly think of.
And that's right. I think that's how we should conclude this week's episode. Remember to check us up on Spotify and YouTube, and follow us on Instagram. Keep up recording Dave on our own socials linked in the bio. Every link we talk about, we'll put some exemplary videos in the description that you can look up and watch some of the stuff that we've seen to research for this episode. Anything else? No? Alright, that's it. Yeah. Haru.
Cause I got that fucking bread, man. No damn